Sensex is opening about 40 points higher, 10,870.
There could be a buying of close to 1 crore shares in EIL just to make sure that the government stake in EIL stands at 52%, even after putting that stake in the ETF baskets.
Are markets attractive, especially in the mid and small caps space? Then definitely yes.
Market is 30 points higher.
Bottom line at 310 crore. It's much higher than the CNBC TV18 poll of 264 crore.
Sensex is up about 100 odd points. The Nifty is up about 0.25%.
Really, the day's headline has been large cap selling. Not to say that mid caps do any better. Actually, in step today, both the indices.
A late sell-off wipes out all gains on Dalal Street. Nifty tumbles below 10,800. Sensex clings to the 36,000 mark. Mid-caps also fall in tandem with blue chips.
Oil-related stocks and PSU banks take it on the chin. Auto stocks also tumble over 1%. On the other hand, IT stocks hold their head above the water, with the index gaining over 100 points.
Bharat Forge stock tumbles despite the company reporting strong growth in the third quarter. Bata rallies nearly 7% after a 51% rise in third quarter profits. Sun Pharma succumbs to profit-taking in late trade even after reporting an all-round beat in the third quarter.
A weak third quarter and concerns over intercorporate loans sink the CG Power stock in trade, which nosedives nearly 30% today.
ITC and Engineers India may not be part of the additional offering under the government's Bharat 22 ETF exchange traded fund tomorrow, say sources. ITC clocks marginal gains. Engineers India succumbs to profit booking. Those were the top 5 headlines from Dalal Street on a day when the markets began with some promise but ended with a whimper. Welcome to Markets Today Talk Back, the show where we will tell you everything that happened in those 6 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. And like yesterday, once again today the market basically sold off in the last hour of trade. Was absolutely boring, flat till that point, and then there was that bout of selling once again which hit the screen. And large caps are doing a fair bit of damage. Over the next 30 minutes, we will talk about the stories which mattered, where guests will take your questions. Prakash Diwan and Ashwini Gujral are with us to take us through what they make of things, and of course, taking some questions as well. Gentlemen, thanks very much, both of you, for being with us here on the show. But as always, take a quick look at what really happened, rewinding the clock back to 9 a.m. right from the beginning. Lata.
Well, actually, we ought to have started on a high. We started in the green, but not quite on a high, because globally, the Dow Jones, the Wall Street indices were on the front foot, and the Asian indices in tandem were higher on expectations that the trade talks will yield something positive. And we had domestic inflation numbers, which were in line and low. So the expectation was that the bond markets will give some bit of cheer to banking stocks, interest rate sensitives, NBFCs. It didn't quite play out that way till end of day. By 2 o'clock, you started to see the persistent weakness come in and profit-taking set in. More particularly, crude prices were higher because of dollar weakness, and that translated into a bashing up of oil stocks. Even the bond markets didn't quite help banking stocks. I think there is a persistent fear that the debt market is still extremely tight, and therefore a lot more companies may fall like 9 pins. We already had, remember, that India ratings report which warned of more NPAs. So there is something that's definitely worrying ICICI Bank. There is something worrying PSU banks. And even today, Axis and other banks also came out for selling. There's something worrying the India index itself. It's not for nothing that it is the poorest performing index year to date in 2019. And finally, as if to remind us of the persistent weakness, was the CG Power stock that you heard in the headlines. It's either a Z or a DHFL or a Vedanta, or some stock which really rudely shakes you up on either the issue of pledge shares or the issue of corporate governance, or simply money not coming back to the company. And today it was CG Power's turn. So one can understand the market's weakness. But and more individual stories?
Absolutely, Lata. And I think there is also this entire, the politics, right, which is very much active. We saw that Rafale issue maybe the report, the CAG report, favorable to the government, but it still kind of highlights that it's going to be very active as an issue. We don't know which side it will favor going into the polls. So I think that is a big one as well, which will continue all the way going into the polls. But here are the stocks then. The PSU Bank Index, the Energy Index, the Infrastructure Index. These were the top 3 losers as far as sectors are concerned. You look at the Nifty, the top Nifty stocks. Aisha, GAIL, IOC, HP, BP, ONGC. I mean, actually, there was a fair bit of oil and gas in terms of losers. Actually, State Bank of India was down 3% as well, apart from the names that I mentioned. In the green, there was Adani Ports, there was Indiabulls Housing, there was UPL, which kind of stood out. I mean, they were far and few in between. There was broader pain, as you said, in CG Power. The stock was down sharply. HG was down sharply. Jain Irrigation, Container Corp lost 5.5. Natco, KEC were some of the other very large volume losers, some reacting to numbers and some down for other reasons. What stood out? Bata, again, earnings reaction. DHFL, it saw a bit of a bounce. Indian Bank was higher. There was Dilip Bilcon, which from 300 zones is now back about 400. Motherson Sumi, 4% higher. And then there was Cafe Coffee Day, which stood out with gains as well. Nata.
Okay, thanks for that, Prashant. Let's straight away go to our guests. Ashwini, well, almost a repeat of yesterday in terms of the last hour crack in the markets. How do you take it going forward?
Well, we've been seeing the same story for last 10 weeks, where every week you either open at the highs and close at the lows, or open at the lows and close at the highs, and the high and low is basically 10,600 to about 11,000. So again, this is a downswing. Like the upswing was fairly rapid. The downswing is often as rapid because the same people are either long or short. I don't think we are possibly getting out of the range, but at 10, 550, 600, you'll have enough short positions that the market will be able to reverse towards 10,950 again.
Okay, Ashwini, thanks very much for that. We move on to the second story, and these are essentially sectors that moved around in trade today. Oil-related stocks, oil and gas-related stocks actually, and PSU banks were the leading losers in trade. This was followed by auto and energy stocks which were down as well. All of them lost over 1.5% each. On the other side, the gaining side, we had technology stocks, which actually were, which was actually the only meaningful gaining sector. The index gained over 0.5% by close today. We got a question, Lata, on KPIT.
Yes, sir. Dilip Jamini has 200 shares of KPIT Technologies. He bought them at 201 rupees. A share has been holding the stock for 2 months now. Wants to know if he should hold or sell. Well, do we have Ashwini with us? Okay, Prakash, your take.
Yeah,
I mean, he has a short. I mean, he's just bought it, but he has not told us whether he is by attitude a longer-term investor.
Yeah. No, so I think it's thanks to this recent corporate action that we saw in KPIT, that a lot of people have got slightly disappointed with what they've ended up owning, after the demerger. So my sense is this is not one of the most flourishing mid-cap IT plays. You have far better quality in the likes of Persistent. At times it could be NIT Tech, it could be Tata LXI, but I don't think this is a stock to play the long term. So if you had a short term view, and if it plays out, you should quickly move out of it because there's nothing in terms of upside triggers that you would get with the demerged entity as well. So my recommendation is to exit the trade and maybe look at something, even if it's for a shorter or a longer term, maybe something else like the names I mentioned.
Okay, thanks for that, Prakash. We got a question from Mahadevi Birardar on State Bank of India. She got 300 shares, bought at 307 rupees a piece. The stock closed at about 267 or so today. A long-term investor wants to know if she should continue to hold or sell. Ashwini, weigh in on SBI and also weigh in on PSU banks in general. I mean, they've been selling off hard now the last couple of days.
Basically, the entire market is quite sideways. So what went up last time because of policy, etc., is now coming off. So unlikely that they will make fresh lows. but most of these guys, Canara Bank, BOB, they've all gone up towards their 200-day moving averages and then declined below them. Similarly, the only things which are pushing higher are HDFC Bank, maybe a Kotak Bank. The rest of the market is pretty much sideways.
Okay. Well, you want to weigh in on SBI?
No, I think since I heard about the orientation being long-term, 307 is not some worrisome level at which it's being bought. So I would definitely believe it would pay off in the long run. Give it at least about a year and a half for it, that 330, 335 zone to be conquered, and then it could probably be a much smoother move upwards. So absolutely keep the faith.
Yeah. Okay. At the moment, the stock is, not doing too badly, I would assume. Today was a bad day. But the third headline, this is on earnings, and the companies that are on our radar today are Bharat Forge. It reported actually a strong set of third quarter numbers. Margins were a beat on estimates. The management commentary too was positive. Stock, however, ended the day in the red. Sonia Shenoy first to give us the key highlights of the results. Sonia.
It was a strong quarter for the company, no two ways about that. The margins were a beat, up 120 basis points year on year at 31.1%. The management commentary was also positive. Baba Kalyani says he expects to see demand sustaining at current levels in the next quarter, and he expects the domestic CV sector demand to become normal over the next few months. So relatively optimistic commentary coming in there. Revenue growth of 21%, EBITDA growth of 26%, margins have improved 120 basis points to 31%, and profit growth of 36%.
Sonia, thanks very much for that. Ashwini, quick thoughts on Bharat Forge? It's been coming off for months now.
See, Bharat Forge is in a very clear bear market, and not Bharat Forge's fault entirely, because that's the kind of market we are in, that unless you shock and surprise the market with results, chances are that even the good stocks are coming off. So my sense would be that Bharat Forge can move towards, say, 390, 400, even from here.
Okay. Yeah, Bharat Forge has not had a good year actually. 2019 itself 30% lower, Prakash.
Yeah, I think it's ever since we had the bonus announcement, it's just been sliding off. And in spite of the management commentary, I think what the street didn't probably reconcile to is if the North American truck inventory or sales numbers are not so convincing, and the management said that they are looking at orders for the future deliveries. The time lag is what people will have to wait out, and I think till March you'll not be able to see. The upside could come from defense and railways for this company. I think that's where some positive headwinds are, and as a disclosure, I also have this in my long-term portfolio. If
you read the CAG report, and I think Prashant and I are halfway through with it, anybody depending on defense doesn't sound like a very good idea. It's quite a lot of back and forth that happens in these orders. You get that clarity from the CAG report. The process is simply too long. Okay, the other result that we should worry about today, or be happy about, Bata posted a stellar set of numbers for the third quarter. Profits increased 50% on a yearly basis. Revenue margins also were a beat on estimates. Stock ended the day 7% in the green. Mangalam with the details.
Well, happy feet for Bata in today's trading session. Hit a fresh record high yet again on the back of a strong set of results in the third quarter. All of the pieces coming together for that perfect shoe. Tell you what, the street was working with a revenue growth of around 14.5% to 15%. The company went ahead and posted 15.5% operational performance. That is where the key gains came in. EBITDA moved higher by about 47%, 164 crores, which is a 30 crore more than what the street was working with. And the margins expanded by 450 basis points. The net profit on the back of that grew by 51%, crossed the 100 crore mark for the third quarter. 103 crores is what Bata posted for the third quarter's net profits. But that's the reported numbers. Beneath the surface also there was a fair amount of strength, so to say, cushioning under the shoe. The first one was the fact that volume growth came in at 3%. That means price growth has come in higher. Premium shoes doing very well. So that is one piece which did well. Secondly, we had the same store sales growth came in at 12%. That was better than what the street was working with, better than what the company posted in the first half. And thirdly, they have been renegotiating their rents, and the rent as a percentage of sale came in at 12.5%, which was again a multi-quarter low. So that was a positive operating leverage benefits coming in. The stock was at a record high ahead of numbers, was expensive, but these shoes just got a little more expensive at 50 times FY20 earnings, but for good quality, long-lasting comfort.
Okay, a lot of play of words there with Bata. Mangalam, thanks very much. Prakash, your thoughts?
So I'll stick to Mangalam's last sentence on the 50 times multiple, and so it's been a great story. 760 to 1260 in a matter of what, less than 6 months, 8 months. And the trigger was when the head of the family which owns Bata as a brand globally visited India for the first time. And it was a very clear statement, and literally figuratively putting the best foot forward, saying this is a market we are depending on. It's delivered, but I would recommend buy on dips. If you're holding, probably book some profits as well, because this is a stellar run. You can't expect this to continue in a secular fashion.
Okay, all right, especially in the difficult market environment we have. So that's Bata. Sun Pharma was the other one. It reported a good set of third quarter earnings. Numbers, remember, came post-market hours yesterday. The stock, of course, reacted today. The company's revenues and margins essentially were at 2-year highs. The profits also grew nearly fourfold, hitting their highest level in the past 7 quarters. In the conference call addressing its investors, the company's managing director, Dilip Shangvi, said the company has responded to SEBI's questions after allegations surfaced from a whistleblower. Listen in to some of that commentary on the conference call.
We've received information requests from SEBI related to our 2004 FCCB issuance and also for our transactions with Aditya Medicines. We've responded to these queries. Beyond this, we do not have any update to share. AML's financials are available in public domain, and it can be seen that it earns an EBITDA margin of only 1.4% from Sun Pharma for distributing its products in India, and its net margins are less than 0.4%.
Okay. That was some clarity or clarification from the management. Ashwini, your sense of the Sun Pharma chart?
Again, Sun Pharma, maybe people thought what was good news. Again, sell-off post the news, and that's never a positive. My sense would be at some point it will go below 380.
Okay, Ashwini, thanks very much for that. We are reviewing the day. We are taking your questions. Prakash and Ashwini are helping us with answers. We are through with 3 of the top 5 stories. So let's move on to the next one. The fourth headline, CG Power cracked in trade today. The stock lost 30% as investors worry about the company's intercorporate loans. They were concerned about that. Also, delay in the sale of its Hungary business. A lot of that back and forth between management and analysts happened on that con call today. Anisha is here with exactly the main highlights. Anisha.
Well, CG Power took it on the chin, down about 30% after 3 major issues really impacted the stock move today. First one being the concern around the intercorporate loans, second being the delay in the Hungary or business sale, and thirdly the high pledge holding. First up on the ICDs, on the intercorporate loans, in this quarter the company has taken a write-off of around 110 crores on account of receivables from a group company. Add to that, for another loan of around 850 crores, the company says that they will be getting back only half of it and they have restructured the other half. So basically the repayment schedule has been changed. Now in the con call today, the company clarified that the group exposure now will be down to 270 crores versus over 760 crores earlier. But do remember that is partly because of restructuring of loan, because actually they have only got back 80 crores as cash versus the 200 crores that they had promised in the last con call. So those ICD issues really impacting the stock move today. Secondly, as far as the provisions go, perhaps this is not the end of it, because the management highlighted that in the coming quarters, though they might not be taking any hit on account of Indian business, for the international operations there might be more provisions coming. Moving on to the second part, which is the delay in the sale of Hungary business. Now, no progress has been made. It sits in the escrow account, which has been the case for the last 2-3 quarters. And the way the management talked on the con call hinted that the company might not be able to go ahead with this deal for the second or third time. Remember, it has already seen extension of 2 times, and now the long stop date is 30th April 2019. The management did say that they're looking to bring down the losses, but the overhang remains. And lastly, on the pledge shareholding, now it is 100% of the promoters' holding which has been pledged, and given the stock move today at fall of around 30%, there is this overhang that the lenders might come to the market and sell those pledged shares. So that also continues to weigh on the stock. Back to you.
There are reductions on 2 accounts. One is the physical cash received against the receivables.
Yeah.
And the second part is the monetization value, which is a non-cash adjustment against the receivables. So both put together, the 760 crore number shrinks to 270 crores. In Q3, we have the clear write-off. What we could see was approximately 5 million, which we have written off in Q3. So outside India, there is a possibility that there will be an additional 5 to 7 million write-off going forward. But within India, to our estimate and to our, now we are out of the woods on that front. So inside India, in standalone India, I do not foresee any further write-off on this account.
Okay. So that's the word coming in on CG Power. The management's defense receivables, they took a hit on that, as well on intercorporate loans, both of which have gone down very badly with investors. Now, Raj Gopalan has a question on this company. He has 6,500 shares bought at 41 rupees, and he's been holding it for 7 months now. Should he continue to hold or should he sell, Prakash?
I know, tough question on a day like this, but if the orientation is long term, 41 again is not a threshold that seems unconceivable, at least in the next 3 to 6 months. A couple of things that you need to watch out for. There's no invocation of the pledged shares that the company has. That's one assumption that we are making, because that could only deepen the crisis. The second thing is that all these businesses that they've acquired, it's been too long for them before even the demerger between the consumer business and the power business. They could not, they said we are not going to acquire some of the other businesses, but the ones that they've acquired have not been completely accounted for in terms of the impairment loss equivalent. And that could continue for maybe another quarter or so. So I think it's always going to be under pressure. So don't expect that 41 rupees to happen in a hurry. But because the stock would have to do almost like 30% from here to generate that kind of a return, give it about 6 to 12 months and maybe then you review the situation.
Ashwini, your sense, CG Power, sell now?
Well, if you don't sell this fast, soon nobody will be owning it. Yeah. Now, what can you say about a 30% fall? If the entire holding is pledged, then any lender selling it and there are no buyers. So it's not that the selling is too huge. If nobody is on the other side, stocks can collapse in this manner.
Yes, I take your point. And once corporate governance questions are raised, it's very difficult to get investor confidence back. It's very difficult to find a buyer when you want to exit. Last headline for the day, ITC and Engineers India may not be part of the additional offering that is coming from the government under its Bharat 22 ETF that opens tomorrow. This is what we've learned from sources. ITC clocked gains. On this marginal gains, Engineers India saw profiting. Do you have a question?
We got a question coming in from Sheikh Rafi, who's written in from Andhra Pradesh. He has 110 shares of ITC. Cost is 288. He's been holding the shares for the last 1 week as a short-term investor. Wants to know whether to hold or sell. Ashwini, ITC, what's the advice?
Well, it will fall less than the others, so kind of defensive, but unlikely that it will get into some kind of a bull run while the market is in this sort of shape. But maybe we'll protect your capital here.
You have any thoughts on ITC?
No, it's too short. 1 week is too short to actually make out one change of fundamentals.
Okay. All right. We'll leave it at that, gentlemen. Thank you very much, Ashwini and Prakash, for joining us and answering all those questions. Wrap up?
Absolutely. It's a wrap here on this edition of Markets Today Talk Back from Radhami, everyone on the team. Thank you very much for staying with us. More coming up on the other side.